All right. Good afternoon, everyone. I am really excited to be here moderating this panel today, actually with three people that I very much admire in the space, on the role of crypto exchanges in Africa and beyond. To quickly introduce myself, my name is Devon. I'm chairman of the board at a company called Linum Labs, and we've been in the Web3 space for 8 years, building blockchain and Web3 products across the board. So, today's discussion, crypto exchanges. They're really at the heart of digital finance revolution, but they're starting to expand to more than just being about exchanges and starting to touch on topics such as regulatory shifts and shaping the future of crypto through other means such as stablecoin integration and even maybe a little bit about meme coins we can touch on. So today we'll be exploring how exchanges are navigating these opportunities and challenges, and we'll also dive into a little bit more of a broader topic around global trends, including how developments in the States might influence African entrepreneurs, and maybe a few controversial topics around crypto exchange controls too, if you guys are up for that. But also on my panel, so to introduce everyone, we have Badi Sudhakaran, the co-founder and chief product officer at Valor. Valor is one of South Africa's leading crypto exchanges, renowned for driving user-centric innovations and scaling crypto accessibility. We have Maurice, the co-founder and CEO of YellowCard, a pan-African exchange focused on remittances and providing local currency options with reach spanning over several African countries. And Marius Reitz, the general manager for Africa at Luno, a global exchange deeply committed to advancing financial inclusions and promoting crypto literacy across emerging markets. So let's begin with a broader look at evolving role of crypto exchanges in Africa. Crypto exchanges in Africa are not just about trading anymore. They're driving innovation in areas like stablecoins for financial inclusion, meme coins for popular imagination, and even integrating mobile money to increase accessibility. So going across the panel, from your perspectives, how is the role of crypto exchanges evolving in Africa, and what trends, like stablecoins or meme coins, do you think are the most impactful for our industry right now? So we'll start with Chris, and then we can just work across the panel. They were going to ask each of our panelists a specific question.
Thanks, yeah. I think if you look I think this is working. Oh. Hello? There we go. I think the big evolution from a crypto and exchange standpoint has been the increasing importance of payments, right? And the increasing importance of the technology and its ability to solve real world problems for real people. In terms of what's the most important thing coming out of that, I definitely wouldn't say it's meme coins, although, dog and cat coin have their place in the ecosystem. I think it's definitely stable coins. Look, I'm biased. I'm so bullish on stable coins. I think we're going up to, $1.05, right? But I think that, stable coins enable payments and enable the space to be able to get into more traditional financial services in a way that other tokens just aren't able to, right? And a large part of the reason is just because it's pegged to the dollar. Everybody knows the dollar everywhere in the world. They know how much the dollar is worth in their currency, et cetera. And so it's just it's a very easy way and a very familiar way for people to be able to get involved in the space and interact in the space, right? And what I always tell people is my mom will never use Bitcoin, but she would presumably use USDC or USDT if the user experience was correct, right? If it was as simple as using a bank account is today, or using mobile money is today in various parts of the continent. And so I think stablecoins remain the big innovation in the space that's really helping to drive it forward in terms of practical use cases.
And that can be tied down to just the comfort factor of it not fluctuating as much.
100%.
Okay, perfect. Thank you so much, Badi, from your side.
All right. Just to introduce Valor. Valor is a crypto exchange based in South Africa. Just a few weeks ago, we reached 1 million user base, registered users on the platform. Since the last year, we have doubled our revenue, doubled our user base, and we are one of the largest exchanges on the African continent in terms of trading volume. Just to touch on the topic, first of all, I want to congratulate all of you who have lasted this long, especially after lunch. I saw a few heads nodding off, but hopefully this panel will wake you up. So in terms of meme coins and stable coins, if 2023 was the year of metaverse, 2024 has been the year of stable coins and meme coins. Meme coins obviously are community driven. I mean, they have value because it's driven by the community. Really, no real utility there, but definitely has been instrumental in bringing millions of users into the ecosystem. On the other hand, stable coins have real use case. Obviously, it's pegged to something that we already know in the traditional financial system, the dollar. And I mean, it has its own flaws, but at least you can use that for cross-border payments, remittances, and reduce friction, reduce cost, and things like that. So in the African context, obviously, stablecoin represents a better utility than meme coins. But at the end of the day, it's all about onboarding. So both stablecoins and meme coins have been instrumental in getting a lot of people to notice the crypto industry and come onto the crypto ecosystem and try out different things on various platforms. But from a crypto exchange point of view, our responsibility is to educate users about the difference between these kinds of assets and how to use them responsibly. And that's what we intend to do on our platform.
Thank you, Badi.
Yeah, thank you. And it's great to represent Luno here today at the 10th anniversary of Blockchain Africa. I think for us, so having been in the African market since 2015, 2013 when Luno launched in South Africa and 2015 in Nigeria, we've observed a change in trends. So, and I think mainly caused by the change in macroeconomic conditions in some of the African markets. If you consider a country like Nigeria with inflation rate of north of 30%, currency devaluation, and many other African markets as well. I think we've seen a shift from to put it bluntly, greed driving the intent to access crypto and to trade crypto to more need. So people that absolutely need crypto to protect their savings, to protect their wealth, and to continue to conduct business, and to gain access to a technology that provides them with a better alternative to what the existing financial system provides them with. So I think that has been the big shift. So obviously with that comes massive responsibility from a crypto platform exchange perspective. The need to operate, in a compliant manner. That's even more important now than ever. Pragmatic regulation, and unfortunately on the African continent, that's still lacking to a large degree. But then also, trade execution, custodial services. So I think, the shift from sort of short-term speculation, which is definitely still there, to more need-based behavior, I think, has forced crypto platforms to really, I think up their service, up their controls, and continue to provide a safe and secure offering to their clients. So I think that has been a sort of the big shift, and I think that's going to continue to be, the macro environment is going to continue to impact user behaviors and the way in which cryptocurrency exchanges, set up their businesses and also innovate, on top of that. Yeah.
Definitely, and I think I'd like to touch on that a little bit more later on as well. And then you're the one that actually gave me the idea for the exchange controls question later, so I'm hoping to maybe dive into it more. But Badi, I actually wanted to ask you a question. So you mentioned as well that Valor now has become one of the leading players in crypto in Africa, in the African crypto market. So I wanted to hear from your perspective on the current state of crypto adoption in Africa and how exchanges like Valor are actually helping to shape this adoption and shape the ecosystem further.
Good question. Where do I begin? Well, how many of you know Michael Saylor? There are some people who don't know Michael Saylor. So I think you're in the wrong conference. Maybe. So, Michael Saylor this week was giving a presentation about MicroStrategy's strategy on their Bitcoin treasury program. And one of the things he said was very disturbing to me. But also thought-provoking. I was thinking about it, mulling over it. And he said, there's not one thing in Africa that you would want to own over Bitcoin. Mm. So that's a profound statement, and especially being in Africa, like we own a bunch of things here. We have property, we have different things, and Michael Saylor's perspective is there's not one thing that that's worth owning in Africa, except Bitcoin. So then I thought about, like, from the perspective of Saylor, like being in America, growing up in that kind of environment with opportunities and things working properly and things like that. And then from an external person's point of view, you look at Africa, there are lots of problems. There are challenges. There's poverty, lack of education, infrastructure, lack of connectivity, et cetera, et cetera. So I can understand that, but I don't believe in that statement. But what we do see amongst all these challenges are opportunities. Like we have a youthful population, we have mobile phone penetration across Africa. We have people who are tech savvy, who are innovative, who are solving real world problems. And so these challenges also come with its opportunities. So and along with that, there's so much diversity. So Africa, you cannot club Africa into one lump and say, okay, Africa. But because North Africa is different from West Africa to East Africa to Southern Africa. So there's a lot of diversity, and I think Chris can probably speak to the nuances around all the different kinds of regulations and all the different things that you have to navigate to operate businesses in different parts of Africa. So what we do at Valor is focus. We're committed to providing a bridge between the traditional financial system and the crypto ecosystem. So we have stable on and off ramps for customers to come bring their traditional assets. So we have customers have seamless access to both fiat and crypto assets, and that's what we want to do, and we're doing. But on the other hand, we're also working with the regulators. So working with the regulators to create a framework that's balanced, that can foster innovation, at the same time protect consumers, and that's the only way we can attract investments and innovation in this and adoption in the crypto space. And South Africa has led the way in the whole of Africa. We have already a licensing framework and regulatory framework which we are part of, and other members of the panel are also part of. So we have the licenses. That also creates confidence from customers and businesses to do business with us. So there's a lot of institutional interest since this regulations have come up and the license have been granted. We want to work with many institutions and empower businesses, empower consumers, and at the same time work with regulators across the continent to figure out how we can take this example from South Africa and replicate it elsewhere.
Yeah, definitely. And I think, Badi, you've mentioned a couple of things that is going to lead quite nicely into my next question, actually, Chris. I feel like a lot of internationals forget how large Africa is and how different all of the different countries within Africa are, and they kind of like group us all together. But those regulatory frameworks that we end up operating across end up varying quite a lot. And Chris, I know Yellow Card operates actually across a number of different African countries. So I wanted to ask you, how is Yellow Card navigating these differences, and what role do you think regulators should actually be playing in supporting crypto growth?
Yeah. Look, I mean, it is a big continent, even though I feel like I see the same people at every conference. But I mean, for context, right, we operate across 20 countries, all in sub-Saharan Africa, and I think a number of countries sort of get grouped together on an external perspective. There's a lot of nuances to operating in various parts of the continent. And especially from a regulatory perspective, right? In general, you're talking about regulators that are not in communication with each other. You're talking about banks that are not in communication with each other and are not, in any. So, it really is important that you're going, country by country and working with the regulators, working with the central banks, working with the ministries of finance, the SEC, whichever appropriate regulatory body it is for any particular jurisdiction when you're going in there. And I think this is something that as a whole I would say the industry has really only come to appreciate over the last few years. I think that you've, finally seen a lot of the bad actors in the space weeded out ever since 2022, right? You had, for those of you that have not lived through, the hell of the ups and downs of this industry, 2022 is when everything blew up and, nobody was sure what was going on, and FTX blew up, and everything else was happening. And so I think, now, look, you've had, FTX has had its reckoning, right? Binance had its reckoning. You had all these, bad actors in the space that have cleaned up their shop, right? Well, FTX is gone, but, Binance has cleaned up shop, right? You've had, other players in the space that have cleaned up shop. And I think that, overall, that's really good for the industry that, these guys have sort of, publicly cleaned up, made amends, and, we're able to move forward in a much healthier way. And I think that, overall, that's what the regulation is now focused on, is how do we prevent stuff like this from happening again. And so, I think overall the space is in a much healthier place. When you look across the continent, you have just, broadly speaking, much friendlier regulatory environment than you've seen over the past several years in like the US and Europe, right? You have, licensing in some in Botswana, Namibia, Mauritius. You have sandboxing in Zambia, Ghana, Rwanda, various other parts of the continent. And so just, overall, I think things have really improved from a regulatory perspective. You've seen, the big players in the space either, go away or clean up their act, and just everything's sort of moving in the right direction from a regulatory perspective.
Yeah, and I think it's always quite difficult for us to find the balance between regulation and innovation in a way that doesn't slow down innovation too much, but still protects the end user and the customer, especially in emerging and new industries like this. And I think tying into regulation, Marius, I know that Luno has partnered with regulators and financial institutions in various regions. How important do you think collaboration with these traditional financial entities is for crypto's growth? And where do you see the biggest opportunities and challenges?
Yeah, thanks. I think it's increasingly important. Bitcoin has entered the frame now as a global financial asset. I think it is ranked 8th now globally in terms of market capitalization, just 6 technology stocks, and I think gold that ranks higher. I read somewhere that the BlackRock Bitcoin ETF now has a bigger AUM than BlackRock's gold ETF. We saw record inflows into those ETFs over the course of the last couple of weeks as well. So institutions are taking notice, and we think that there are big opportunities for South Africa in that regard. So the demand has shifted, not completely, but shifted from retail to institutional. We've seen a decoupling between the price and also the interest from retail investors. If you look at previous bull runs, you would see that there's quite a strong correlation, a positive correlation between retail interest and prices. But over the last couple of weeks, that actually has changed. So we think that there will be bigger demand from South African investors. At first, family offices, local hedge funds, professional trading firms, but then also in the end, asset managers, those asset managers that actually that issue the exchange traded products. And I think the conversation is moving forward. I know there are many stakeholders locally, from the JSE to many asset managers, as well as the regulators, that are currently figuring out how to approach this. So I think collaboration is going to be essential between cryptocurrency platforms, CASPs, and these, especially asset managers. I think, for a couple of reasons. Firstly, from a custody perspective, crypto firms can provide the technology stack and the infrastructure to the asset managers. At Luno, we are positioning ourselves for that opportunity. We offer ring-fenced bankruptcy remote custody solution to institutions locally. From an exchange traded product perspective, I think there will also be opportunities. It will give investors the opportunity to gain exposure to crypto price movements and market movements without having to hold the underlying asset. And then also, I think, sort of more medium to long-term tokenization of assets, which will enable fractional ownership of shares, for example, commodities. So I think many exciting opportunities, but there are still some challenges. I think we'll discuss that later, but exchange control is one. And I think uncertainty around the classification of crypto as an onshore versus offshore asset. I think that's one area where financial institutions still seek clarity. And then secondly, I think maybe to a lesser extent is the sort of still the risk aversion from a banking fraternity perspective in engaging with crypto firms. Banks are important stakeholders for cryptocurrency businesses, and although banks are moving into the crypto space, there are many banks that have their own blockchain and crypto teams that are assessing opportunities in the market, but there's still this aversion from providing basic transactional banking services to crypto firms. So I think that interaction between crypto exchanges and the banking fraternity and asset managers will be interesting because we're entering a new phase where recently regulated businesses are having to negotiate and work with the incumbents, and that dynamic is going to be interesting as well. So I think those are the things that I think we should be on the lookout for. But at Luno we've been predominant retail business. We still continue to build products and services for retail customers, but we're also focusing on institutions now through custody, through trade execution. For example, launching a trade desk as well for access to liquidity. So I think the momentum in the US will spill over to the African continent over the next 12 to 24 months.
Definitely. And so you've mentioned a few times CASP now, so the crypto asset service providers that have recently also just been issued by the FSCA. I'm curious to hear actually all of your thoughts now maybe on that, on how you think that this regulatory next step is going to influence the crypto ecosystem and markets here in South Africa, and if you think that'll have a further impact or influence on how the rest of Africa is kind of handling their regulatory frameworks. So whoever's keen to start off that one, we'll take it.
I think like I mentioned, right, licensing and regulatory clarity are a good thing. And, unfortunately, there's not a lot of countries around the world, never mind Africa, where you're able to get that, right? I mean, in the US, you have companies like Coinbase that go public and then get sued by the SEC that let them go public. And so, the ability to actually have regulatory clarity in South Africa and a number of markets on the continent, I think is very important for adoption, for businesses getting involved in the space, banks getting involved in the space. And I think we'll continue to see quite a bit of growth out of South Africa because of the willingness of the regulators here to actually look to the future and try to foster a safer environment for the industry here.
So do any of you know as well, like with the FSCA drawing in, I guess, similarities with the SEC, if there's any, I guess, overlap or diversification yet in terms of crypto asset classes, from utility to assets to real world assets, if we start actually breaking down those kind of, I guess, differentiations between different digital assets?
I don't think there's clarity at that level.
Okay.
But just to answer your previous question, and I agree with Chris, I think regulatory clarity fosters trust, both from retail customers and institutional customers. So I would think that institutions that have been on the fringe, trying to take a wait and see approach, may be considering jumping in. And I think at the world stage, I think things are also looking quite positive, like Marius said, like U.S. elections. In the 2 weeks since the U.S. elections, you have seen this boom that's happening in the crypto space, and I think there is positive regulations coming from the West, and then there's spillover effect on the rest of the world, and we are quite fortunate to be working with regulators here in South Africa who have taken a proactive approach of licensing and creating the regulatory framework. As I said earlier, I think it's a good example for the rest of the continent to follow suit and then figure out how they want to adopt or adapt some of these regulations for their own jurisdictions. So it's a net positive. we are very happy with that. And of course, there are still some kinks to sort out, especially exchange control that we'll talk about next. But overall, it's net positive, both for South Africa and for the rest of the world.
No, I agree with everything that was said.
Okay, perfect. All right, so then I wanted to touch on exchange controls as well, just to kind of like end us off. So exchange controls have long kind of been a challenge across Africa, I think, in general, African markets, limiting access in general to financial systems. With crypto exchanges now coming up, offering an alternative that somewhat bypass traditional controls, I'm curious to hear from you guys whether you see this as a threat to existing financial systems or an opportunity to reimagine how cross-border transactions are happening. So how should crypto exchanges actually be navigating this tension between, I guess, like operating within the exchange control frameworks and offering more of, I guess, an unrestricted financial access framework?
Yeah, I mean, I would just say that, from a high level, money and value flowing in and out of an economy is not a net bad thing, right? When you look across the continent, most of the countries in Africa are very import dependent, right? Even if you look to South, right, they depend on imports from South Africa. You look at countries on imports to provide goods, services, right? Consumer goods in most parts of the continent are imported. Most countries are importing food still, right? And so, for any import, it's going to require dollars, right? It's going to require money leaving the economy to be able to bring things in that people need to survive. And so, I think from a high level, right, there's no sort of bad thing that's happening if it's an economy. Looking specifically at crypto, I think one of the stable coins and crypto more broadly, as you think about exchange controls and payments, is that with money doesn't actually have to leave the economy in the traditional sense, right? Governments and central banks spend a lot of time, a lot of effort worrying about dollar reserves. It's how all of these countries are paying off all that debt to China. It's how they're, propping up their currency. It's how they're maintaining everything that they do for the local economy. And one thing that stablecoins do is it actually helps sort of stabilize those dollar reserves, right? Imports are able to continue to happen. Food is able to be brought into the country. Medicine is able to be brought into the country without hard dollars having to necessarily leave the central bank's position. And so I think that, overall, I think that when you look broadly across the continent, a lot of regulators have started to understand this, which is why you've seen such a positive shift in sentiment towards the space over the last several years. And so, it's not, it's not an inherently bad thing, right? And I think that, the utilization of stablecoins, the utilization of, crypto assets to be able to power some of these international payments is actually a net positive for, for the economy, in that it can keep those hard dollars where the government wants those hard dollars. It can keep the central bank reserves largely untouched, while still, again, bringing in the food, the medicine, et cetera, that people need to survive.
Well, I think if you look at the licensing and regulatory framework across the world, you'll see that it's easier for regions without exchange control to create that framework, create that licensing framework, because of this particular contentious issue of externalization of capital. So I think that is also the reason why it has taken such a long time for South Africa to also create a framework, and it will also play a part in how the rest of the African countries think about exchange control and regulations and licensing crypto providers. The challenge is that when you think about capital, being offshore and onshore. Crypto assets are onshore and offshore at the same time, right? It's like asking whether your email is in Africa or your email is in America, right? So it's a digital asset, and it's difficult to reconcile the concept of capital externalization, and obviously we have these regulations in South Africa, and sometimes it is hard to put a square peg in a round hole, and we have to work with the new technology and new innovations that are happening and see what kind of balanced regulations make sense for this. And I agree with Chris that like the net effect of a trade is actually zero on the treasury and the dollar holding of the Reserve Bank. So I think there are some conversations yet to be had, particularly about exchange control. I think we need to figure this out.
Yeah, to add, I think regardless of your business's ideology, and views of ex-con, I think that's a reality for us in South Africa. And we have to work together with regulators to really find solutions to those problems, because at this point, I think ex-con and uncertainty is probably the number one reason for the lack of further economic growth driven by crypto exchanges locally in South Africa. And we're falling behind other markets globally. I think, we talk about externalization, but there's also probably a much bigger opportunity for foreign direct inflows into SA, especially SA Inc. That needs to repatriate, profits from foreign subsidiaries. There's a massive use case right now at this moment that can drive significant economic growth in SA. I think from an investment perspective, the classification of crypto, Badi touched on this as whether an onshore offshore asset is extremely important, because what's happening now is asset managers and advisors are investing SA client funds into offshore crypto ETFs, where those investments could have been made locally in South Africa. So that's very simply just stating that crypto can exist, or crypto is an onshore asset. And then secondly, the reporting frameworks already exist for cross-border payments, outflows, specifically for corporates, outflows of funds, inflows of funds, the Bob code reporting system. Crypto is just the mechanism or the means to effect the transfer. So those tools already exist. Crypto exchanges, we have the technical knowledge and expertise to plug into the existing reporting system. And I think that's also, for us, something that should happen fairly quickly, because everything, all the pipes already exist for that to happen. Yeah.
Thank you. And thank you all for giving your thoughts on that. I wanted to close off with actually maybe just asking you guys, final question on what next, or what do you think will be the next biggest role that exchanges take on in further driving this innovation, being, I guess, a driving factor in creating financial inclusion and to promoting crypto adoption in Africa. And where next for all of you, because you're all three major players in this market. So I'm curious to hear your thoughts.
Yeah, well, I mean, look, there's always more dog coin to sell. No, I mean, I think, for us specifically, right? Our goal is, how do you get more, similar to what you were mentioning, right? With foreign direct investment, right? How do you get more companies from around the world actually operating on the continent, hiring on the continent, investing in the continent, et cetera? And providing them with payment infrastructure that works is a key part of that. And crypto and stablecoins specifically are a big piece of that, right? So we have an API that I like to call Africa as a Service, but that abbreviates to ASS, and so the team doesn't let me call it that. But essentially, what that does is that takes these these rails in the 20 countries that we support across the continent, and makes that available not just to companies on the continent, but then to those off as well. The Coinbases, PayPal's, Blocks, et cetera, of the world. Encouraging some of these companies to actually come into the continent, invest, hire, and grow. Right. I think as we look at the broader ecosystem and just the broader economy, of the various countries on the continent. it's critical to get that that FDI flowing in, and so that's I think a huge use case for stable coins, for crypto, right? It gives people a lot more confidence being able to operate on the continent, and that's one of the big things we're focused on.
Well, Africa is definitely one of the fastest growing crypto ecosystems in the world. Shows in the data. In the bear market, crypto adoption grew in Africa. There was about $125 billion worth of transactions on chain. The crypto adoption index, I think some of the countries in Africa rank the highest. And the Google searches for crypto is the highest in the continent compared to any other continent in the world. So I think there is definitely a lot of potential, and like we mentioned, balanced regulations can lead to better adoption, and that's both innovative but also protects consumers. At the same time, at Valor, we are focused on what we call build with Valor. So we have many institutional grade features that we've built just for institutions to come on board and provide services to your customers. And there are several customers who are already doing that on our platform, and several customers to come. So that we are very excited, especially given the positive regulation that's been happening in South Africa. We are inviting you, if you're a business, to come and build with Valor.
Yeah, final word. I think the Africa's macroeconomic situation and also outlook, I think, is going to further drive grassroots level adoption, and that's what we've seen up to date in most African markets. Outside the big four, South Africa, Nigeria, Ghana, and Kenya, the coverage from a crypto infrastructure perspective is fairly or very limited. So I think there's still a big opportunity and still a big responsibility on us as exchanges to service people in those markets. So that's a priority for Luno. We're very soon expanding into the Kenyan market and also exploring other opportunities in Africa. Then we'll also see as I said earlier, the institutional and the CASP worlds meeting each other. The role of CASPs changing slightly in that regard as service providers or infrastructure providers. And that's also going to play out, I think, over the next 12 to 24 months or so. So that, I think, really exciting period for crypto in South Africa and Africa.
I definitely think it is. So thank you so much all for your time. Good luck with Africa as a service, Build with Valor, and your expansion into Kenya. And I hope you guys all enjoyed the panel. Our panelists, I'm sure, will be around afterwards if you want to ask them any more questions. I don't think we have time for questions. So thank you all so much, and we'll catch you.